Choose the wrong real estate platform and you could be stuck for years with your cash tied up or even exposing yourself to unexpected risks. Today we're breaking down Arrived Homes, Fundrise, Groundfloor, and Yieldstreet, which offers genuine liquidity and which delivers the best risk and return balance. Let's find out which one actually protects your money. Now, before I ever put a single dollar into any of these platforms, I did what I always do. I went straight to the user's feedback. I wasn't looking for the hype. I wanted to see the real frustration points, the one-star complaints, because those often tell you more about a platform than 100 5-star ratings ever will. And with Arrived Homes, I came across the review of a user who was frustrated that he couldn't use it from the UK. He created an account and then couldn't find a way to delete it. Now, that's a fair point if you're international, but honestly, Arrived is very clear that they're a US-only platform. They're SEC regulated, which is actually a huge plus for security. And their support team also responded directly, offering a clear solution to delete the account via email. So that suggests that it's less of a platform flaw and more of a geographic limitation for now, which is common with US financial products. And digging further into the reviews, the positive reviews for Arrived Homes are overwhelmingly strong. One investor said that he already owns shares in 35 rental homes and is collecting passive income without dealing with maintenance headaches or tenant issues. Another said that the platform made browsing debt and equity so simple that investing became stress-free. That's the balance I like to see. Fundrise, on the other hand, had a user who felt the platform was locking the money away for extremely long term, saying that you won't see much of a return unless you're in for 50 plus years. So that's a serious concern if you really value liquidity up front. But here's my take. Fundrise is designed for long-term hands-off growth, not quick flips. Their structure is built around that. And while that long-term focus might not be for everyone, many users absolutely swear by it. One reviewer called Fundrise transparent, professional, and reliable, saying they've earned his full trust, something that's not easily won in this space for sure. And looking into Groundfloor's reviews, a common complaint I saw was more technical, like a user who couldn't link a new bank card after their old one expired. So that's annoying, I get it. Any hiccup with funding is frustrating. But looking at the bigger picture, these seem like isolated customer service hiccups, not systemic flaws, because I didn't find similar reviews from other users. And importantly, Groundfloor's core product, short-term real estate debt, seems to perform well. I found reviews from people who've been with them for over 7 years now, consistently getting informed about their investments and earning returns that blow traditional banks out of the water. One user called it a simple way to grow money gradually. That's a strong long-term vote of confidence. Yieldstreet had a review that gave me pause. An investor reported a 2-week delay on a withdrawal and no response from support, which is enough to make anyone nervous. Liquidity and trust are everything. However, it is worth noting that Yieldstreet deals more in these complex alternative assets, which can sometimes have those longer processing times than a simple stock trade. While that doesn't excuse poor communication, it might explain the delay, and the reality, plenty of Yieldstreet investors praise it for its consistency. I found users with 6-year histories on Yieldstreet, boasting about 16 successful investments in a single year that all performed as expected. That kind of track record is kind of hard to ignore. Alright, so after sifting through all of this, the Arrived Homes versus Fundrise versus Groundfloor versus Yieldstreet debate starts to get a bit clearer. It's not about finding a perfect platform, those don't really exist. It's about finding the right platform for your goals and your tolerance for things like lockup periods and liquidity. So where do these platforms truly earn their keep? This is where the differences between Arrived Homes, Fundrise, Groundfloor, and Yieldstreet become crystal clear. Let's start with Arrived Homes. Their standout feature is sheer simplicity in fractional rental ownership. You can literally buy shares of a single-family rental property and start collecting dividends from rent without being a landlord. But it's the depth behind that simplicity that impressed me. They operate a private credit fund, which is a non-traded mortgage REIT that's essentially a pool of real estate-backed loans. This means you're investing in a diversified portfolio of loans, generating returns from borrower interest payments. It's a different way to get exposure to the housing market beyond just equity. They're also very transparent about risk. Their single-family residential fund may use leverage to boost returns, but they're upfront about this, so they can talk about how this amplifies losses too, which is a level of honesty that I appreciate because that is true. Most importantly, They have some safeguards. Every property has a cash reserve for vacancies or unexpected repairs, so if that's ever exceeded, their corporate entity covers the shortfall with a loan, so they won't ask you, the investor, for any more money, they just deal with it themselves. And a huge plus for trust. Arrived is SEC qualified. Their offerings are regulated, which isn't something every platform on this list can claim. You also get the tax benefits of depreciation, which they handle on the back end, simplifying your tax filing. Now, compare that to Fundrise. Their strength is diversification through EREITs and eFunds. You're not picking properties either, you're picking a strategy like supplemental income or long-term growth, and their team builds a portfolio for you. You earn through quarterly dividends and potential appreciation of your shares. A unique feature is the Fundrise IPO, where you can actually invest in Fundrise itself, the company. It's a novel concept, turning users into owners. They also offer IRAs directly on their platform, making it easy to invest for retirement with tax advantages. But it's a much more hands-off, set-it-and-forget-it model compared to the property-level control that Arrived offers, so just wanted to note that. Groundfloor takes another approach. Their entire model is built on short-term real estate debt, specifically financing fix and flip projects. You're essentially playing the role of the bank, funding loans and earning interest. Their key feature is the Flywheel portfolio, an actively managed fund that automatically diversifies your money across hundreds of these loans. It's for investors who want higher yields than a savings account, but with shorter terms than a long-term equity hold. They also offer Groundfloor notes, which are these lower-risk, shorter-term investments backed by a pool of loans, and self-directed IRAs for tax-advantaged investing. The control is there, but instead of owning homes or funds, you're lending money to developers through short-term, high-yield notes. What also impressed me was how SEC-qualified limited recourse obligations back every loan with a first lien on the property. So you're not gambling blindly, there's collateral. Compared to Fundrise and Arrived, Groundfloor is much more hands-on with debt investing, which some people love. Yieldstreet casts the widest net. Beyond real estate, they offer access to private credit, art, litigation, finance, you name it. Their flagship feature now is Yieldstreet 360, a managed portfolio that automatically allocates your capital across these alternative assets based on your risk profile. They've even partnered with Equity Trust to make adding alternatives to retirement accounts as simple as buying a stock, and their new investment tracker aims to provide more transparency into the status of your investments. I tested it and I really liked the transparency. It showed each step of where my money was, from deposit to accreditation checks. But despite how powerful they are, these platforms are nowhere close to being perfect. With Arrived Homes, the biggest downside is its illiquidity. Like, if you're investing for the long term, they're just developing this secondary market for shares, so it's not like a stock you can sell in seconds. It might take a really long time until you're actually able to sell them. So this is a trade-off for the stable, income-focused returns. Fundrise has a similar but often longer liquidity constraint. Your money is meant to be parked for years, not months. Their long-term focus is a feature for some, but a definite downside if you might need that cash sooner. Groundfloor, while offering shorter terms on its loans, can sometimes feel less polished. Reviews point to customer service and interface issues that are less refined compared to the others. Yieldstreet's strength is also its weakness, the complexity. The breadth of alternative assets here can be less liquid and more opaque, and more complicated to deal with everything, which demands more sophistication and learning time from the investor. And when comparing Arrived Homes versus Fundrise versus Groundfloor versus Yieldstreet, the fee structures are as different as the platforms themselves, but they're all reasonably priced for the depth of tools they offer. For the most current pricing, discounts, and promos, check the links in the description below. We keep them updated so you can always find the best deal. All in all, Arrived Homes provides a uniquely balanced solution. Its SEC-regulated structure, focus on investor protection, and simplicity make it a strong choice for most beginners seeking passive income. Use the links in the description to access our exclusive discounts and get started today.